Good afternoon, ladies and gentlemen, and welcome to the BYOTROL PLC Interim Results Investor Presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab that's just situated on the right-hand corner of your screen. Please just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all of the questions submitted today and publish responses where it is appropriate to do so. Before we begin, I would like to submit the following poll, and as usual, if you could give that your kind attention, I'm sure the company would be most grateful. And I'd now like to hand you over to Executive Chairman David Traynor. Good afternoon, sir.
Thanks, Jake. Thanks very much. Good afternoon, everybody. Thanks very much for joining the call. We're going to talk today about the first 6 months of this financial year to 30th September 22. I think the first thing I want to say is that I recognise that the results this time around are not the most overwhelming of results. So there's no new IP news, no new news on cash from IP deals, no big sales, and no news flow on future transactions. And the truth is that there just isn't anything to talk about specifically, but underlying it, everything within the business is going really, really, really well. We're making real progress, and that's illustrated by 4 things I want you to remember as we go through the slides over the next hour or so. So the first thing is that gross margin is up by 3 percentage points, 3 points in the first 6 months, despite the really terrible market environment that everyone's operating right now in the UK, despite the various inflationary pressures. The second thing is that we are sufficiently confident in the future performance of the company now to put out projections for the next 3 financial year endings. Obviously, those projections come from FinCap, but we've given a guidance on where we think we're going to come out. So that's a sign of big confidence in the team. Thirdly, we have a lot of confidence in the IP agreements that we talk about on a regular basis, all coming through. Plenty of spend going on, plenty of activity going on, and plenty of belief that it's all going to bear substantial fruit as time goes on. And finally, management has invested just about £500,000 directly in the business in the fairly recent past, which we wouldn't be doing unless we thoroughly believed in the future prognosis, the future potential for the company. So, what you're going to hear today is confidence in the big picture trends in the industry that we've been talking about at length in the past. They're on the left of the slide. Confidence in the impact of the structural change taking place in the industry, and genuine belief in our positioning within it, which is science-based, regulatory approved chemistries, building up barriers to entry to our markets, and protecting our future position and growing into the space left by other people as they exit. You're also going to hear a lot about operational improvements, and those will include things like massive increase in focus, so 7 tech platforms to 3 product tech platforms and 1 IP, a reduction in our targeted market segments from 6 to 3, and a big reduction in our SKUs. And those are things that led to the gross margin picking up so nicely over the period. I'll talk more about IP and give you as much detail as I possibly can at the moment. And also we talk about some of the management changes that have been taking place in the business over the last period. The particularly good news is that we've got good people in all the right seats now as a business. We've changed the team around quite a lot. And the really good news is that probably for the first time ever, you're going to hear less from me than you are from other people in the team, which I think is a sign of how the quality of the business is improving as we go. So first of all, I hand across to Chris Sedwell to talk through the numbers. Chris, over to you.
Thanks, David. So I've got a couple of slides on the financials, but as a big picture overview, before I go into the detail, these show 3 things. Firstly, the increase in gross profit margin, as David's already mentioned, and that Viv will talk about a bit more later. Secondly, that we continue to invest carefully in our operating cost base to provide the platform to support our future growth. And lastly, that we have the cash required to support these plans. So, the P&L slide. On this slide, we've shown H1 comparatives against the prior year, which is usual convention, but also versus the last H1 pre-COVID. So that's April to September 2019 or H120, to give a more stable comparative of performance. In the prior year, we were still seeing the impact of COVID on our ordering and sales results. And indeed, this time a year ago, we went back into another lockdown. So total sales for H123 are 2.232 million versus 3.2 million in H122 and 2.174 million in H120. So a slight overall increase versus 20, but below last year for the reasons we've already mentioned. Also, last year benefited from the significant contribution of the Integrated Resources Agreement in the IP sales line. Gross profit of 1.1 million is below the 1.7 million of H122, but ahead of the 0.9 million achieved in H120. Encouragingly, our adjusted gross profit percentage on product sales of 40.3%, which is adjusted down to exclude the favourable impact of provisions releases, is ahead of last year's 37.4% and also ahead of the full year product sales gross profit margins in full years 22 and 21. This is a direct benefit from one of the focal points of our strategy, which is to drive sales growth in our higher margin sectors. OpEx of 1.4 million is slightly below the last half year, but ahead of H120, reflecting our continued careful investment into our operating cost base that we believe is required to support the sustainable growth of our business. The EBITDA loss of 0.3 million is ahead of H120, but behind the result of H122, given the reduced sales as previously mentioned. I'll now move on to the balance sheet. So the balance sheet, the intangibles show our ongoing investments into our technologies, with the impact of 0.3 million of amortization offset by 0.2 million of spend in the first half. Our long-term receivables increased to 1.8 million, reflecting the new rentals agreement announced in July, plus some favourability from foreign exchange movements in the period. As noted in previous presentations, these IP deals represent guaranteed future minimum cash flows and are key to supplementing the cash generated from our product sales activity. Cash is at 1.2 million, so up slightly from the year end of 1.1 million, but reflecting the fact that we continue to invest carefully into our cost base to support our growth, as we've mentioned. Within borrowings, we now have the 1 million convertible bond issued in July, with over half of those funds coming from management and team. I'll hand over back to David now to talk about IP.
Thanks, Chris. IP reporting is difficult for us and causes some frustration within the team, but also with our investor base, and I understand that. We're so tied up in various agreements, confidentiality clauses and NDAs, it becomes very difficult for us to talk in detail that we'd like to talk, frankly, to investors and more broadly. Revenue so far it's fine, but it is relatively limited from the big two projects that we have been talking about for a while now. But the feedback from both those projects is very positive indeed. I'll talk more about those in a second. Of those two, Solvo, of course, is the one that everyone focuses on considerably, which is the right thing to do, of course, from an investor perspective. So our first commission was invoiced to Solvo financial year 22. It's quite small, but it was the first sum that we have billed them for, so it was a good step forward. Since then, the formal EPA registration that Solvo have had for Act His Own has been added to by the individual state registrations, so they are now officially good to go with US domestic launches with their customers and also for global launches. And we understand that there are launches being prepared. We also understand that there are second and third generation techs and formats being prepared, which indicates to us that there is still continued investment in sizable amounts at Solvo in the States and also in the rest of the world. Now, we're not allowed to talk about exactly who the customers that they have are, but we have seen, as have some of our investors commented, links with Reckitt Benckiser, RB, for various brands of theirs. And we had various gossip about some very big household names in the facilities management sector as well, but we don't have any confirmation of that we can talk about. And we are aware of some FMCG companies in America looking at a launch. Now, what we don't know is whether those launches are going to be core products, so big new core product launches, or whether they're going to be brand extensions to start with that may then lead into product launches. And we will find out after the event, and we'll report on it as soon as we possibly can. But things seem to be going pretty well, and we're very confident that there's some money coming into us in the quite near future. On integrated resources, you remember that's the US licensee that we have that has done a deal with a very big sub-licensee in the States. Again, online, there have been links made between integrated resources and Ecolab, and we've seen that. I couldn't confirm or deny whether that is the case, but I do know that the company concerned is of that magnitude, of that profile and magnitude, and we think that there is substantial upside from that as well once they get through the EPA process. And the way the EPA process works is you have your initial approval in place and then individual state approvals. And then if your sub-licensee or licensee wishes to make any changes, even changing a full stop to a colon, you need to get official approval to do that. It's a very painful process. And when you're looking at it in advance, it's expensive and cumbersome. But when you're there and you have the approvals, it's a very good barrier to entry. So look, we feel really confident that there's some money coming in from that particular arrangement as well. Quite when it's going to be, I just couldn't tell you right now, but I do feel it is relatively near term. On the other licensees, they are all bumping along at the bottom of minimum guarantees right now. Now, I say in our slides that they are performing to expectations, and that is because the markets have been so difficult across the board, both in B2B and B2C. That is not a surprise to us. So the bad news is that we're not getting any extra P&L input from those transactions at the moment. We think it would change, but we're not at the moment. The good news is that we're still getting cash from the minimum guarantees. So the value of BYOTROL is picking up the longer those licenses remain in place. Ultimately, we remain dependent on the success of our licensees and their customers to make any money. And ultimately, we find out relatively late in the day is quite how much money they're making. And all we can do is work on the basis of feel and internal communications with those customers as to how well they're doing. But I can honestly say we feel confident about it right now. And as markets pick up, we expect that to improve as well. We have other IP discussions taking place, of course. I think that the resources in the company that's gone into IP and technology commercialization has been relatively limited recently, because basically it was me doing it as well as running the company. And one of the reasons that we hired Viv is that he could then take over the day-to-day operations of the company and do the basics much, much better than we've been able to do ourselves, and leaving me and one other person freed up to work more aggressively on the commercialization of intellectual property and looking at other IP ideas that we have. So that is already starting, and we will deliver some new things, just not quite sure when yet. But we're certainly, I think the outlook is very good for it. So I'm now going to hand across to, I'm sure there'll be some questions, by the way, on that. We'll answer those once we get to the end of the presentation. I'm now going to hand across to Vivan Pinto, who's going to talk you through strategy and tactics. Over to you, Viv.
Thank you, David. My name is Vivan Pinto, and I've been with BYOTROL since January 2022. Prior to joining BYOTROL, I spent 20 years working in general management, strategy, and marketing for blue chip companies like Pfizer, Reckitt, and J&J. And I've worked in the UK and around the world. Since joining BYOTROL in January, I've spent the last 12 months in a detailed deep dive looking at the overall business, meeting our customers and understanding the regulatory challenges. Through this, I've applied my learnings to professionalize the company in a cost-effective manner. This is about fixing the basics, as David said, and creating a solid platform for profitable growth. And it's already bearing results as we improve our gross margin. We have been working on putting in place a new leadership team, executing the Medimark integration, simplifying the business post-COVID, and projecting a clear strategy to commercialize the business. This is in light of the technology platforms we have and the upcoming regulatory challenges we face as an industry over the next 3 years. So looking at the slide itself, this covers our overall strategic framework broken into 3 key stages. So stage 1, which is historic, is from 2013 to 2021, where we have made significant progress moving from a startup to a small break-even operation. The acquisition of Medimark certainly step-changed our revenues, but it also dramatically increased the complexity of our operations. Stage 2, which began at the start of 2022, is where we embarked on our next phase of growth. It's really about simplifying our R&D approach from 7 products in 6 segments towards 4 technologies and 4 segments, with continued investment in strengthening the clinical efficacy and robustness of the technologies in light of the regulatory changes facing the industry. We also focused on hiring professional management as we moved from startup to a sustainable, profitable organization. This includes recruiting myself, Chris, our CFO, a sales lead, supply chain lead, and marketing lead to complement our strong R&D infrastructure. We've not only streamlined our technology, but also our operations by reducing our SKUs and direct customers both by 25%. This activity is already bearing fruit, as we have, first of all, successfully launched our tech platform in animal health, and second, our operational changes, which have resulted in gross margin improvements of 3 percentage points, 290 basis points in the first half of 2022. Now we get to stage 3, which is really looking at the next 3 years, driven by implementing our strategy of focusing on high margin, high growth segments with technical barriers to entry, and do this with our new operationals team, with an ambition of achieving around 10 million sales, with EBITDA improving to the 20s. Key drivers would be the launch of the new platforms over the course of the next 3 years, which give us superior products which meet the requirements from the UK and the EU perspective to drive growth. We have launched the first and the next one. We've launched the first one already, which is the cruise platform, and the next one we plan to launch in financial year 23-24, with the last ones in 2025. Okay, David, on to the next slide. On this slide, I will take you through our overall strategy and how we will position the business for growth over the next 3 years, based on maximizing our technology platforms and improving our operations. So if we take a look on the left side, it's just a broad reminder of the global biocides market in 2022, where we compete within the EU biocides market, which is undergoing fundamental change to the EU biocides product registration, which I'll refer to as the BPR, and the key segments we operate in, which are animal health and surface care. So that's the slide on the left. That translates to us in the focus areas on the right. The focus areas on the right. We operate, which are the focus areas on the right. The focus areas on the right, the first one is animal health. We will gain a leadership share in the niche small vet UK market segment. Through the acquisition of Medimark, we already have market leadership in this segment, so we have the right infrastructure and brands with Anagene to be successful. We have also in November launched our Anagene upgrade with our new cruise technology platform, which has been received very positively. Our final objective is to target European distributors with the new Anagene formulation when we are in a full range of stock in January. For context, either France or Germany has the same market potential as the UK and provides tremendous growth potential, considering our products meet these latest BPR requirements for these markets. The second segment we're focusing on is human health, which we will address by rolling out the cruise platform into human health. We know that the infection control benefits and lab testing, which we have completed, provides strong efficacy on surface care within the human health segments, like labs and hospitals. Once we roll this range out through the Chemgene brand, we'll be in a position to target the EU countries from April quarter of 2023. And now we look at the third and final segment, which is consumer. Here we will strengthen our hand sanitizer business as consumers move beyond the basic germ kill requirements of alcohol and look for products which provide added value of everyday use, either being gentle on your skin for regular use or safe for the entire family. We will look to reformulate our hand sanitizer to a more robust formulation in April quarter 2023, whilst better promoting the benefits of an alcohol-free formulation to consumers. We will look to improve our distribution in the pharmacy channel, where we have a healthcare professional in store to share the benefits of alcohol-free formulations with our consumers. So those are our three pillars. Underlying those three pillars, we have a general platform, which is really focused on licensing and IP deals, where we will monetize all the technology platforms which we develop in areas outside of our core operations, as well as specific geographies which have high investment barriers to entry, like the US. Looking at the next slide. What I'd like to do here is give you more of a deep dive looking at animal health. This is the segment where we're most advanced in implementing our strategy. So I can share with you some information on how the strategy is progressing here and show you some hopefully positive initial results. So first of all, in terms of our share evolution, we're already gaining share. And this is driven by winning specific large tenders, around 5% of the market, with the new cruise formulation. We expect this trend to continue as our competitors come under pressure to have a regulatory approved formulation on the market over the next 3 years. We've successfully launched our cruise formulation in the market, which is the second pillar you're seeing here, at the London Vet Show in November. The formulation is also robust. And the second point I'd like to make is that we've received DEFRA approval for 4 of our variants in the new cruise range. And I think that's really important because historically we've achieved approval on 1 product, whereas now we have 4. And that highlights the benefits of taking a platform approach versus focusing on individual product segments. Finally, we have our operational capabilities in place. We have recruited a seasoned sales team with strong experience in animal health, which have completed their onboarding and are delivering results, as well as the benefits in marketing and operations as we prioritize investment in the animal health, and have completed their onboarding and are delivering results, as well as the benefits in marketing and operations as we prioritize our investment in the animal health launch. And I'd like to share with you some results of this. In November, we sold about 2 times our prior year sales in animal health for the month, which is about 70% over the forecast we had for November, which is an encouraging start to the launch. And we have improved our gross margin in animal health by 1 percentage point in the first half of 2023. So hopefully that highlights the fact that we're implementing the strategy in animal health, and most importantly, that it's bearing strong initial results. So then, moving on from our strategy, I'd now like to give you an update on how we are proceeding with the operational changes we have embarked on this year. So in terms of operational excellence, we have made good progress on rationalizing both our SKUs and customers by 25%. This has taken a large amount of complexity out of our business and helped us eliminate unprofitable SKUs and transfer small, high costs to serve customers to a third-party distributor, which specializes in this area. So effectively, we've eliminated unprofitable SKUs and also moved our smaller customers to people who are better equipped to handle them. We're also nearly complete with exiting our Chinese manufacturing, with all our new platforms being manufactured in the UK. And that's really important. So going forward, we're moving more and more to UK manufacture. We've also simplified our R&D approach from 7 product formulations to 4 technologies, which we will continue to develop and launch over the next 3 years. The criteria being that these 4 technologies will have superior science and germ kill benefits and will be supported with dossiers for the UK and BPR biocides product registrations, which will be coming in over the next 3 years. We have also made progress in terms of our organization and culture, having completed the integration with Medimark post-pandemic. This includes closing their offices in Sevenoaks, integration of the data systems into one, and consolidating the operations infrastructure in Chester. We're also step changing our digital and IT approach by consolidating into one BYOTROL website, the www.byotrol.com, with new digital content, harmonized CRM or customer retention database, and an improved customer marketing and sales focus. Our next initiative is to consolidate our R&D. Platforms. We are exiting technologies where we do not see a sustainable long-term position for BYOTROL, specifically PHMB, where where several of the supplier formulations have been taken off the market in the UK from January 2023. So they're just coming off now in January. Medical device formulations where the regulatory requirements are becoming stricter and are really outside our expertise in biocides. Which are really outside our expertise in biocides. And the original HLD4 formulation, where we have successfully transitioned to our upgraded anagene formulation through Cruise. We will, however, continue to develop and launch our new biocide-based platforms in Cruise, hand sanitizer, naturals, and seaweeds. So while we're definitely exiting some areas which we don't feel we have a long-term benefit in, we are replacing these with more robust formulations and platforms, which will be supported under both the European and UK biocides regime. Finally, with investors, maybe I can hand over to David to share some comments here.
Yes, I think we probably misspoke last time we were on this, because I think we said that we were going to target monthly investor news flow. I think we got some of our words wrong. So we are targeting monthly news flow to customers and to the market. So that's LinkedIn and all the various digital things that we're doing with a view to increasing sales. That's what we have been doing so far. And if you're on LinkedIn, for instance, you'll see a lot more noise from us. What we have failed to do, and which we need to do, is then translate that news flow that's going to go to investors as well. We haven't quite found the way of doing that in a way that is meaningful, but we're going to do that. So I would never say that we're going to come up with monthly investor news flow, because I don't think I'll be able to deliver to it. 4 weeks, 4.5 weeks is quite a short time to change things in a way that's impressive to investors. But we are going to start making sure there's better links between the industry news flow that we're doing, and there's a lot more of it. There's now a dedicated market team and the investor news flow as well. So that's work in progress at the moment.
Very good. And then finally, next slide, David.
Hold on. There you go.
Very good. And finally, I wanted to share with you our 3-year ambition as BYOTROL. The chart starts with 2022 size and split of the business from our audited financial results. This shows a business with 6 segments generating £6.3 million of sales, which was EBITDA positive. By implementing the strategy above, our ambition is in the 3 segments to generate our ambition is to generate in the 3 years to get to around 9.4 million in sales. And this is the forecast provided by FinCap, generating around 2 million in EBITDA. By 2025, we'll have launched all the 4 platforms mentioned, simplified our business into 3 core segments, supplemented by licensing and IP to monetize our technologies outside our core segments, and have a profitable growing business poised to expand in a post-BPR environment.
Okay. Thanks, Viv.
David, over to you.
Okay, great. Thank you. So hopefully you can see that there's a huge amount of work going on the nuts and bolts of the operations of the business that's going to get us to the point where the product sale side of the business is going to cover the costs of BYOTROL overall, and it then exceed the costs. And then the IP activities are going to be cherry on the cake. And that's been a long-term target ever since I started running the business, but haven't really had the resources to get to so far. But I think we are now on the path to do that. And when we talk internally about the business, we talk about ourselves as growing up properly and becoming more sustainable. And that's what's led to the projections that we are now putting out to the market via FinCap. So the opportunity, though, that we face remains as massive as we have always said it is. And all the trends that we said were going to play out, so people leaving due to regulation, growing market, more nuanced market, bigger emphasis on viruses, all that is definitely playing out in front of us. The trick that we have to do now is to make sure there's a nugget of a business that is profitable on product sales with some degree of brand equity recognition that then means that we can project our profits into the future together with some confidence in IP, and every now and then step change the business completely through a combination of both. And the dream is to get to the point where we're sufficiently profitable to start paying out some money. So that is paying out some money to shareholders, paying out more money to the team, investing more in marketing, and investing more in R&D in a fairly judicious way. But the way we're going to achieve that is by being much better in the operations and delivery of the plan we have been able to do with the resources that we've had historically. So that's the plan, and we are just working on execution at the moment. The current state of the business actually is very, very healthy. The fact we're investing more money out than we're getting in shows that we believe it's healthy, and the fact that we are putting our own money into the business now in size should give you confidence that we think we really are on something still. So I was going to pause there, and there's quite a lot of questions coming in. Thank you for those questions. We'll have a go answering some of those.
Okay. David, Vivan, Chris, if I may just jump back in there, and thank you very much indeed for your presentation this afternoon. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab that's situated on the top right-hand corner of your screen. But just while the team take a few moments to review those questions that were submitted already, I would like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. David, Chris, Vivan, as you can see, we have received a number of questions throughout your presentation today. So thank you to everyone on the call for taking the time to submit their questions. And guys, perhaps if I could just hand back to you to run through the Q&A tab to respond to those questions where it's appropriate to do so, and then I'll pick up from you at the end. Thank you.
Okay, thanks. So I'll start off with Graham Watson. Vivan, this is one for you. Can you give an indicative roadmap for new product geography launches? For example, indicative timings for launching Anagene into Europe, Biopet into the UK, Europe, Naturals products.
Of course. So, as I mentioned before, our important timeline for that is first to develop the formulation, which we've done on Anagene. We are rolling it out into the UK as we speak. And then the next stage would be looking at rollout into Europe. And the timings for that, we would estimate around April, May, June. So that quarter in 2023. Looking beyond that, with Biopet into the UK, that's our RTU formula. It's a trigger formulation, which means that we would look to launch that into Europe, probably in the April, May, June quarter two, once we've launched the concentrate. And then looking at our naturals range, that's our Artemis product. That's currently a platform technology. So we still need to do some development work on that. But we would expect to be able to launch that in Europe sometime in financial year 24 to 25, and the UK primarily.
Thanks, Vivan. So the next one is, which I will take. Can you update on the prospects and indicative timing for a commercial development agreement on seaweed? Well, we're working hard on seaweed. We think seaweed is more likely in the pharma or over-the-counter market than it is in biocides. It's not our core market. There's plenty of development work going on, and there are conversations taking place. It is a lengthy set of conversations because the market is different to one that we are experts in, but the conversations are all positive. I don't really want to put any time frame on when we'd expect to deliver something, because it's very hard to know when you deliver these things, and they're very binary. But what I'll say is it's an active project within the team, and it's somewhere where I'm putting a fair amount of my own personal time into it. And as an example, we found out that the extract that we use, and that has these fantastic antiviral properties, is actually a waste product of some of the foodstuff manufacture for pet food. So there's some interesting angles on, can we link up next to a foodstuffs manufacturer, a little plant next to it, take out some of the things that they don't use, and both make some money out of it. And those things are fairly complex and time consuming, but they are all active, and we feel positive about it. Next question. Viv, you can have a go at this one. So how is the competitive landscape changing? How you are being affected by supply chain issues?
So first of all, in terms of the competitive landscape, yes, it's definitely changing. We see that the key macro trend, which we are leaning into, is going to be the heightening of the regulatory requirements to be in the market. So what we believe will happen over time is that you'll see a big shift from those who are playing on cost versus those who are playing on having the right R&D and clinicals to continue in the market in the medium to long term. So we really see that happening. And that really plays to the favors of BYOTROL, and is one of the reasons why BYOTROL is fantastically placed as a company, because of our investment in the next platform of technologies, which will be approvable and robust in this new environment. And then in terms of the supply chain issues, supply chain has been quite volatile, particularly during the pandemic. Following the pandemic, we did see a situation in the marketplace where you had some competitors or some providers which were overstocked, creating issues in the market. But now I think we're moving into the third state, which is really driven by the cost of doing business around the world. And we're seeing with global inflation and the rising energy prices that there's a cost implication for doing that. However, I would say that BYOTROL is well placed because we have moved a lot of our manufacturing out of places like China and into the UK. So we're in a relatively strong position with supply chain, but we continue to focus on managing our costs going forward, as everyone will have to do. It's a continuous win.
I had dinner with the head of alliances at a very big global hygiene company a couple of months ago, and he told me that the CEO of their company, and you would recognize the name, all he wants to talk about is platform technologies that are going to be regulatory approved in their various markets. And the idea is, if you have decent platforms and you've got decent distribution, then basically take those platforms into a whole variety of different markets. And I thought, well, that's exactly what we're trying to achieve without the distribution. And if there's a way that I could get some sort of valuation done for the asset value of our company, I would do that, because we've gone from one dodgy technology, PHMB based, about 10, 15 years ago, to 4, 5, 6 technologies that we think all have value in their own right, just in different iterations in the markets that we approach. The trick is to get the execution capability right to actually be able to distribute those technologies in an efficient way. And that's why we spend so much time on the fundamentals of operations at the moment. That was from Anne. Thank you very much, Anne, for that question. I'll take this one. Why is there no investor-focused PR around the Energy launch? No RNS, no press release, not even a news item on the investor site.
I can answer that, David, a bit.
Please do.
Yeah, it's that the most important thing for us when launching the new product was ultimately getting the awareness up for our customers who buy the product. So you can see that whilst we didn't have an RNS because we didn't really have any financial or share price driven announcements directly, we did spend quite a bit of time announcing it to our customers. So if you look online, we were on Vet Times, we were on other trade related media, and you can see on our website we had quite a lot of announcements and pictures and everything from the launch. So that's really what we focused on. However, I take on board the fact that, we could do more to announce it to the investor community, but we just have to think about how we do that. It's not really a share price related announcement or a financial related announcement, but nevertheless, we'll think about how we do that going forward, how we can improve that with our investor community.
And I think that comes back to my earlier comments about linking up the investor community with the industry news that we're putting out, and we just need to improve that. We'll work on doing that. We've got people now in the company who can do that for the first time, so we'll improve that. But Graham, I think it's Graham's the questioner. I think it's a fair comment. So maybe we should have done an RNS reach at the time. The fear is always that we're going to set off some hype in the business that we then can't control. But I think in this case, probably we're too conservative, and we'll attend to that. Next question on Solvo royalties, which I'll have a go at. Do you have any Solvo royalties, your first half numbers, or did you exclude as you do not receive that information yet? When do you receive in-fund royalties? How frequent? Well, the terms of our arrangement with them are that we receive their commission rather than royalty, because they actually own the IP. We just get effectively a commission on whatever they sell. That is supposed to be struck every 3 months. And the numbers at the moment are relatively small, so we haven't been receiving something every 3 months. And we have invoiced our first bill for them on it. There will be some to come this financial year as well. And I'm actually in the States only in January to talk to them about exactly how much that's going to be and when that's going to be received and exactly how the calculation is being conducted. So we know we'll need to talk more about it at the moment. We are strung up again by NDAs in terms of giving the detail. So we tend to hide that number within the overall royalty amount. If we could release it separately, we will do. And I think what will happen is as their numbers start growing, you will see that existing royalty number picking up by quite a lot, and you can put two and two together and come up with, what's the right answer, because it should be the single biggest remunerative thing that we do in intellectual property in the not too distant future. I'm really sorry I can't give you more detail on it. Another question on seaweed. Do you have the financial resources, management time, or appetite to take advantage? Well, that's the reason we don't have any news flow so far, because most of our resources has been going into operations and marketing for the new products and rationalizing and all those good basic things. One of the reasons we made the management change, as I said before, is that we need to dedicate more resource to intellectual property and commercialization. So that's what I'm going to be doing, and I want to have some dedicated resource in the company to do it. But we haven't had that so far. It really literally has been making the business into a much better business behind the scenes so far. Viv, for you, could you say a little more about the background to the withdrawal from the well-known pet retailer? Was it a case of them trying to squeeze margin too hard? Are you happy that you've got other satisfactory avenues for sales?
Sure, I can answer that. Look, for us, it was, less about them trying to squeeze margin, right? I don't think that was the case. And I think it's really about the reality of our portfolio and what we see as the long-term future of that portfolio. And parts of it were challenging for us to manage, particularly when we have a product range where we're manufacturing it at low cost in China. And, we felt that it was the best for us going forward to bring that back to the UK, particularly as we were looking to move to stronger technology platforms. We were in a situation where, the equation didn't work for us unless we had a fundamental change in the relationship with the retailer, right? So that's okay. In terms of how we manage that going forward, ultimately our long-term strategy remains to focus on products which are based on our new technologies, like our cruise technology, like the Anagene technology, and to manufacture that in the UK and to drive our sales through that. So for sure, we are looking at other avenues for sales within that specific consumer animal health sector. And we really believe we have a strong platform to drive that growth over the short to medium term, which is really based on our new cruise platform, our Anagene product launch.
Thank you. The next question is can we say a little about the reasons for completely pulling supply out of China? Why don't I have a go at that, Viv?
Yeah, sure.
Yeah, so the good thing about China historically has been you can do short manufacturing runs at very low cost, and then you can supply product to your customers, where you can make some sort of margin and they can sell something at relatively low price. The bad thing about China is obviously the political situation and the various shutdowns that have taken place. You don't have a lot of control over your supply chain, and we started to struggle with provenance. So it's quite difficult to ensure that the ingredients that you're putting into your products are completely trustworthy and are being treated in completely the correct way. So you have overall issues, potentially on quality. We started running into a few of them. And the complexity that creates actually became a problem for management costs and control. And so when we looked at it, we thought that because we're making such improvements to the UK and European side of the business, because we're reducing our SKUs, reducing our technology platforms, and increasing economies of scale, we can probably offset the margin reduction that we're getting because the UK is higher cost, from the geographical transfer, but actually offset that by the economies of scale we're getting on doing the basics better in the UK. And so far, that seems to be the case. There are some SKUs where we can't get to the price with the quality that we need from production outside of China. And so we're taking that hit, and it's one of the reasons that the sales have gone down a bit. But what we do is we gain on simplifying the business, and we gain on actually quality business overall. And that should show a benefit to the business overall as we go forward. That's the bit we're taking. Viv, anything to add to that?
Yeah, I just say as a general point is that making this transition from sort of low-cost manufacturer at distance towards maybe, albeit higher cost manufacture close to home, linked up with our new technology platforms, is improving our GP. So we're actually driving results that way. So I think that that's a positive approach, which gives us, again, the ability to invest in those new technologies and continue driving that growth over the medium term.
Thank you. Viv, another one for you. Is competition still keeping pricing low? What new competitors to BYOTROL have emerged?
Sorry, could you say that again?
This is from Neil.
Yeah.
Neil B. Is competition still keeping pricing low? What new competitors to BYOTROL have emerged?
Yes. So what I would say is that in terms of competition keeping pricing low, I think that you're seeing a split into two. So you're seeing some low-cost manufacturers, for sure, which are really focusing on a race to the bottom. But what we're also seeing is that a lot of manufacturers have been driven by inflation to move their costs up. So what we're seeing is that competition is following that two-pronged approach. In terms of new competitors to BYOTROL, actually, what I would say, and I think this is really this is driven by the current economic climate we're in, is that what we expect to see is that some competitors will come in, but we actually expect more competitors to exit the market. And this will be driven by the inflationary costs we're seeing in the UK and Europe, but also by the biocides regulation coming in. So actually, we think that those two factors will actually take a lot of new competitors out of the market and ultimately drive prices up for our competitors.
I think the reason we're sticking on animal health and niche human health is that margins are there much better because your customers need your technology to perform. You can't be, sanitizing a vet surgery if your product doesn't kill the bugs that need to be killed in that environment. So animal health and human health margins actually still quite good. The performance characteristics, though, are significantly higher than elsewhere in the sanitizing market. Which means that your regulatory approvals have to be that much tougher to achieve. So our bet has been that by producing high performance chemistries that are regulatory approved in the higher margin markets, we will be able to sustain better margins than elsewhere. Like facilities management.
Absolutely.
Yeah. So facilities management, for instance, is a horrible market to be in. So the basic cleaning of offices and factories, if they're not specialist factories, is mop and bucket with a product that makes very basic claims that just has to sort of provide a tick in the box for overall cleanliness of the environment, but you ain't getting the margin. So the reason we're doing so much less on facilities management right now is we don't think we can make the money that we need to. Sorry if I've interrupted.
No, you're absolutely right, David. And that's why I wanted to highlight our strategy is really focused on those pillars where we think that we have the ability in high growth, high margin areas to have technological barriers to entry and where we can win. So in answer to your question, I would say that when I look at the competitors, I would say that our competitors are becoming much more focused. And we're really only trying to compete in those areas where we have barriers to entry and where we think we can win. And that's fundamental to our strategy going forward.
And that seems to be playing out. So in animal hygiene, we're being invited into tenders in the charity sector, animal charity sector, for instance, where well-known players have withdrawn because they don't want to spend the money in the regulatory process to achieve sales, which are in truth adjacent to what their core market is, very often in human health. And we're just stepping in. And those opportunities are high margin and attractive to us and are sustainable. Okay, thank you for that question. Question from Ian. The market share, again for you, Viv, I think. The market share implied in the slides seems small, even with the new sales targeted. Are these base case targets, and do you expect to overachieve against them?
So, sorry, specifically the market share?
Yeah, so I think it's referring to the animal health market share slide, which is basically, we saw a market leader in a very, very small niche market.
Yes, I understand. So we are in terms of the animal health market, really where our strength is in small vet practices. And within that small vet practices, we have a commanding share, a leadership share, close to 50% or higher of that market. Yeah, which is really important. Now, that's where we start. Now, when we take a look, that same market expands across Europe, and we have competitors within the UK which are exiting the market. So really, we can pick up chunks of market share just by focusing on those markets. So just be really focused on where we want to win, but also then look for geographic expansion beyond the UK. As I highlighted, is that when we look at Europe as a whole, both Germany and France are the same market potential as the UK, right? So really our opportunity to expand those business in those two countries would give us a significant upside in terms of growth, as well as having a strong base in our core market as our competitors leave that segment. And the reason this dynamic is all happening is as we face into this biocide product registrations or the UK registrations, which are really tightening the regulatory requirements to successfully compete in those markets. So that's where we can win, and that's where we can win share.
I think the other thing to say is that the traditionally BioTrol and through the acquisition of Medimark, we've been strong in this rather strange title, small companion animal vet premises. A mouthful. A lot of those vet premises are increasingly being owned by European buying groups, and so what we are able to do as that consolidation, entrenches and gathers momentum, is it gives us links into the buying groups in Europe as well, continental Europe. And so what we're doing is trying to build up extraordinarily strong market share in those niche markets where there's a chance for European to expand in equivalent in Europe, because we know the right people already. And that seems to be playing out as well. And then we'll be doing that in adjacent niche markets as time goes on.
Yeah, and of course, David, one of the points to mention is that our strategy is to really remain focused operationally on niche markets where we know we can win. So we're going to continue doing that. But underlying those pillars is this platform around licensing, right? So we will be able to access wider markets where we might not have the right capabilities to win operationally in those markets, but we have brilliant technology which we can license to other companies who can then access those markets.
Thank you. So, Chris, one for your finance.
Yes.
Treatment of the interest on the convertible bond.
Yeah.
First 2 months. How are you looking at that?
Yeah, so it's so thanks for the question, Neil. If you look at the published interim results, you will see that there's finance expense of 21,000 in both the P&L and the cash flow. So it's gone through there. From a technical perspective, it's not accrued, obviously, in the balance sheet because we pay it out in cash quarterly. So on the 30th of September, the interest that had accrued had been paid out. Therefore, it's not accrued in the balance sheet, but you can see it in the cash flow and in the P&L, and it's part of that 21,000, as I mentioned.
Thank you very much. So Viv, the question from Graham On HLD4 and its upgrade cruise and the regulatory approach, I think basically it's getting at the dovetailing of HLD4 and being gradually replaced by cruise. So do you want to talk through your tactics and how we're doing that?
Yeah. So which question? What's the question?
This is the Interim referred to HLD4 and its upgrade cruise as a core platform supported through. Yeah. Does this mean you're planning to continue selling Anagene in both formulations, or will HLD4 be sold off or closed down?
Yeah, it's a great question. So, over time, we will evolve into the Anagene cruise formulation. The reason for that is simple, because it ultimately has to be approvable by both the BPR, the European BPR, and the UK regulations. And in order to do that, we need to have the R&D, the clinical data, the safety data, all of that data, which makes sense to focus on the one platform. I mean, having said that, it's going to take time to do that transition, right? So we first focus on the UK to make sure in the UK we complete that transaction successfully and that transition successfully. And then we focus on Europe, right, to ensure that we also complete that transition successfully. This will take 6 months all in. So that's why I say that we're going to look in Europe from April onwards, and we'll focus on the UK in January. So we complete that transition, and then we look to the next area, which is human health, where we can implement the same transition, again, using the cruise technology platform to launch into human health. And again, we need to follow that same approach of focusing on the UK, getting the launch right, and then looking at where we can expand that. But then ultimately, there's plenty of opportunities to look beyond Europe at, how can we leverage this technology in Asia, in the Far East, potentially in the US through licensing, or elsewhere, South America. So, we have a lot of opportunities, but it's really important we build our core first, transition our core business in the UK, and then take a look at how do we scale that out through the rest of the world.
Yeah, there've been some questions on sort of progress in European distributors so far. You got any comments on that, Bernard? What I would say is it's fairly early stage. We're just starting, so we're getting the basics right first in the UK, getting our operations right, and the conversations with European distributors are just starting now.
So that's a really important point, right? Is that we're focusing on getting the UK set up, and that's going to really be in Q1. Not Q1, January to March quarter of 2023, before focusing on Europe. And it's really important because when we focus on Europe, we want to be able to have samples which we can share, as well as packaging solutions for the different countries, different languages. In France, you need to put French on the bottle. Germany, you need to put German, etc. So, it's going to take a bit of time. I would say that our thinking is developing quite strongly focused on France and Germany as lead markets. But I don't have any news to share yet. And when we do sign up, it often depends on, what is the confidentiality around that agreement and what we can say before we will be able to, put anything in the public domain. So we just need to be sensitive with our partners. But sure, as we develop our business and those new platforms, I'm sure, David and me know that we need to communicate that as best we can.
Thank you. So we've got a minute to go. There are just two questions I was going to answer very, very quickly. One is, what is a technology platform? It's basically the chemical technology that we have that we invest in and get regulatory approved. So it's cruise, it is in virtue hand sanitizer, alcohol free, it's seaweed, and it is a product area called Artemis, which is a natural form of sanitizer as well. That's where our technical work is doing. And then what we do is we then target those technologies into products, into market segments, animal health, human health, or consumer. Yeah, that's where our marketing investment goes. Or we do it via licensing into other areas altogether. or we take the other technologies that we have that we wouldn't call core technology platforms and we license those out. So the idea is we're being a lot more focused in product and marketing and resources on the technologies in key markets that we think we can make a difference, and everything else is business development. So that's platforms. And then a comment on share price. Well, I think we're very undervalued right now. I think the business is light years ahead of where it's ever been before. I know we need the pressures on to execute, but when I look at all the individual things that we're doing, I think that we're doing all the right things, and I think we're going to grow. I think we're being affected by market sentiment in general towards us, but also towards the sector. But when we look at it as a management team, we're really confident in what we're doing, and we think it will start to show at some stage. The dam will have to break in the not too distant future on all the royalty and commission revenue and on the regulatory rules actually now biting in all the markets that we're operating on, and that's not too far off right now. So I'm going to stop there because we're at 4 o'clock. Jake, you still there?
David, Vivan, Chris, absolutely, and thank you very much indeed for addressing all of those questions that came in from investors this afternoon. And of course, if there are any further questions that do come through, we'll make these available to you immediately after the presentation has ended for you to review, to then add any additional responses, of course, where it's appropriate to do so. David, perhaps before redirecting those on the call to provide you with their feedback, which I know is particularly important to yourself and the company, if I could please just ask you for a few closing comments to wrap up with, that would be great.
Okay, thank you. Well, thank you for joining and thank you for engaging so well. And I would say the questions that have been asked are all the right questions, the things we talk about all the time. So in some ways, I feel quite good that we're having the debates on all the core issues between us that we identify, you identify. So it feels like people know what we're up to now, which is great. We operate in a massive growing global market with very small resources. But the market is changing exactly the way that we said it would. And we've been talking about this now for 5-6 years. And we believe that our positioning to take advantage of that still remains really, really strong. And there are individual things going on with people exiting and us filling their space that give us further confidence that we're doing the right thing. If there's one thing that I could do, it would be press a time machine and accelerate progress, both on the IP side and on the product sales side. But I can't. But what we can do is concentrate on making a better business, make it a lot tougher, a lot more resilient, doing the basics really, really well. And so when that dam does finally break, we think it's coming, we will do very, very well. Because don't forget, there's a lot of optionality in this business, and there's a lot of operational gearing. So at some point, that is going to change, and I think we'll all do very well from it. Thank you again for attending. Look forward to further conversations.
David, that's great. And Vivan and Chris as well, thank you once again for updating investors this afternoon. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of BYOTROL PLC, we would like to thank you for attending today's presentation. That now concludes today's session, so good afternoon to you all.
Thank you.
Thanks.